Well, let's get some business news now with Charles Pellegrin. Hi, Charles.
Hi, Karis.
You're starting in China, where the latest consumer price data is raising concerns about the country's economy.
For the fourth straight month, consumer inflation in the country weakened to get closer to zero, to that flatline level. This means consumer prices in the country have barely increased compared to the same month a year ago. In December, the consumer price index rose by 0.1% compared with a 0.2% gain in November. That deceleration, as you can see there, started in August, where the CPI was at 0.6%.
Well, this trajectory in prices might seem like good news for consumers.
You would think that, but that's actually the wrong way to look at it. Prices aren't rising fast enough because demand is low, because consumers aren't spending like they used to. Price decreases can have disastrous consequences. It can lead to people to hold back on their household spending for longer, as prices might keep falling. It can also hurt corporate income to the extent that they have to reduce investment, cut wages, or lay off employees. All of this is a real concern for the Chinese government, which said last month that its top priority for 2025 was to boost consumption and domestic demand. As a result, they've pledged to use more public borrowing and spending, as well as monetary easing, to spur growth in 2025.
All right, so how's all of this playing out in the markets?
Well, let's have a look then. In the Asian bourses, whether in Hong Kong or on the mainland, the bourses there are either trading lower or, both trading lower at the close. So the Hang Seng down almost 0.1% lower, and the Shanghai Composite down 0.5% lower. There are other concerns as well. While China is worried about deflation and what that might mean about domestic spending, the U.S. is still concerned about inflation sticking around. And minutes from the last Federal Reserve meeting published on Wednesday highlighting those concerns, which could slow down the central bank's rate-cutting cycle. That a key factor here. And those concerns also on inflation also high on investors' minds in Europe as they await fresh data this week at the open. Except for the FTSE in London up just above the flat line, the Paris CAC 40 and the DAX in Frankfurt trading lower at the open.
All right, and moving on, the decision by Mark Zuckerberg to eliminate Meta's fact-checking program in the US has sparked criticism from abroad.
Absolutely. The decision, widely seen as a concession to incoming President Donald Trump, who has long complained of anti-conservative bias in social media content moderation rules, but there are economic incentives as well. Brian Quinn takes a closer look.
A move widely seen as a bid to curry favor with the incoming Trump administration, as Mark Zuckerberg announced the end of Meta's fact-checking program in the U.S. He's also likely to see an immediate effect on his company's bottom line.
Mark Zuckerberg says it's a free speech issue. That's completely wrong. Only if you're profit-driven can you claim that. Only if you want power and money can you claim that.
Facebook and Instagram now join X, the social network owned by Trump supporter and advisor Elon Musk, in relying on community notes for content moderation. Meta launched its fact-checking program in 2017 after a wave of largely Russia-driven fake news stories on its platforms during Trump's first campaign. It relies on the newsrooms of media partners to verify information posted on its networks. French news daily Libération has been part of the program since 2021, bringing in $250,000 per year. With 90 such partners across 127 countries, scrapping the program could save Meta millions. For now, the fact-checking shutdown applies only to the U.S. The EU says any policy changes here must comply with the bloc's sweeping Digital Services Act.
Before deploying such new policies or features that may have a critical impact on systemic risks, platforms, very large online platforms, including Meta, have to conduct a prior risk assessment analysis and send it to the Commission.
But U.S. tech titans do have their sights set on EU regulations, with Zuckerberg accusing Brussels of passing an ever-increasing number of laws institutionalizing censorship.
That's it for me. Back to you.
All right, Charles, thank you for that business update.